Hi, I'm Jody Buggett, President of the Americas at Personetics. Customers have many jobs to be done regarding their financial lives: saving for a goal, paying down debt, growing wealth, making a big purchase, and their primary bank is in the best position to deliver on these customer needs. Regional banks, however, face rising competition from multiple sources. The trillion-dollar banks now capture 51% of new checking customers. Challenger banks, who attract now 15% of customers that are new to the banking industry. Wealth companies are extending into banking services. And retail and big tech are using banking as a service platforms to introduce new distribution points to address customer needs. I recently met with a dozen CIOs and chief digital officers at an executive roundtable on open banking. And there was wide agreement that open banking and the transition to open finance will exacerbate the intensity of competition by creating greater transparency around pricing and also ease of data sharing. The outcome from all of these developments that are underway is a greater disparity in performance between banking leaders and banking laggards. We're already seeing a dramatic shift in customer behavior. Almost 70% of financial transactions are performed through digital channels. Legacy tech stacks can hold back the degree of innovation for some banks. We're likely to see greater churn and margin compression. And lastly, the new distribution points for customer engagement will further intensify competition to deliver on these banking needs. With all of these changes, however, there is a set of enduring customer expectations that continue to prevail: to know me, to value me, and advise me. In light of the changing landscape, there's a real challenge for regional banks to evolve the local relationship-based banking model to deliver on these needs and deliver with excellence. With this context in mind, I believe that data-driven personalization is the new basis of competition for regional and community banks. It starts with cleansing and enriching transaction data to deliver personalized insights and advice. The next stage in maturity is enabling journeys to help customers accomplish their jobs to be done with insights, offers, and automated programs. And the last stage is developing connected channels. Doing this by propagating customer intelligence across channels to enable a blended experience. In other words, leveraging customer insights across the bank and proactively engaging customers based on the most appropriate channel of interaction. The competition is well underway. In fact, our study of the top 40 North American banks show that 55% of them have either implemented or are in the process of implementing some degree of personalized insights and advice. And let me take somewhat of a bold stance and say that basic levels of personalized insights and advice will become table stakes and will be offered by all banks by the end of 2023. So if it's not in your budget for 2022, highly likely it'll be in your budget for 2023. And more importantly, this capability is more than just about achieving parity. This will also be the battleground to differentiate regional banks. Now, Personetics has the most robust library of insights globally, more advanced than any bank. It spans 11 categories with 200 plus insights. It includes identifying a duplicate transaction charge, change to your deposit, or payment patterns of activity, identifying when you're better suited for another product based on your transaction activity, or signaling to customers when you may have a low balance issue in the future in advance of your next expected deposit. Together, these personalized insights and advice interactions delivered proactively help customers manage their day-to-day banking. And it will soon be expected of the primary bank. I was at a bank CEO retreat in Chicago earlier this month where Brian Moynihan eloquently spoke about the remarkable results that Bank of America is achieving and how they're building these personalized insights into the Erica platform. Now, B of A has a prodigious set of analytics resources and an ample investment budget. And not all banks enjoy that luxury. The vast majority of banks can benefit from leveraging an external platform to achieve scale and efficiency and spend their precious internal analytics resources on creating custom insights and interactions tailored to their unique customer base and their offerings as well. Many forward-leaning banks are already showing results. US Bank's mobile app and mobile overall experience was rated #1 last month out of 17 banks by Keynova, and prominently called out were the proactive insights and guidance to improve customers' financial health. Several years ago, Huntington may have been considered a branch-based high performer. Financial Brand acknowledged them as quietly becoming a digital powerhouse and voted #1 mobile app by J.D. Power last year. And again, prominently featured are digital advancements such as the Huntington Hub, which includes heads-up insights, and Money Scout automated savings. DBS in Singapore has won accolades as the most innovative in digital banking globally and Asia's best bank. See what they've done with how they branded their experience, effortless banking, to drive new organic customer acquisition growth.
What if banking could be more intuitive? And it could learn what matters to you. So when something looks unusual, it lets you know fast. It keeps an eye on things, so you can just... Exactly. Because an effortless day is living more and banking less. Tap into a world of effortless banking.
Finally, KBC in Belgium has also seen wide success, achieving a 90% customer satisfaction rate and 35% active monthly engagement. They recently were named Best Mobile App by SIA Partners in Europe. We love when our customers receive accolades, and we are proud to call all of these banks our partners. Beyond delivering personalized interactions, the second stage in the journey is around journey enablement by combining insights, automated programs, and offers. Let's take a situation where a customer has shown increased income deposits, excess liquidity in checking, and starting to make purchases at a baby store. We can now proactively invite that customer to sign up for a goal and offer saving for a child's education as one of those options. Once a goal is established, banks can offer insights suggesting how much the customer can save at any given point in time, or alternatively, offer an automated program that has the intelligence to save on behalf of customers because banks understand the customer's cash flows. The program understands the cash flows so well so it can save to the capacity the customer can without incurring a balance issue. Another example, we recognize external debt that's increasing, and this customer is starting to revolve debt. They don't have an internal bank loan product. So in this case, the bank can proactively offer them two options. One is a debt consolidation loan to save on interest rate payments. And the second is an automated program that offers accelerated debt paydown. Ask the customer which debt they want to pay down, and the algorithm will start to move money when the customer has the capacity to do so to pay down the debt. So just consider how much customers will appreciate their primary bank helping them better manage their debt and doing so proactively. Connected channels to deliver unified advice is the last stage in data-driven personalization. So in this customer situation, we recognize a disproportionate spend at home improvement merchants, Home Depot, Lowe's, and an external mortgage that's being held by this customer. And this customer has high branch propensity as well. So in the digital channel, we will deliver personalized insights with home improvement content and home improvement loan options, and perhaps even an option to set up an appointment with a banker. In parallel, though, we'll propagate this intelligence to the banker so that they can be very informed in their outreach with the customer to discuss their home improvement needs and the best option to accomplish their job. Lastly, we'll push this intelligence to the customer data platform in the marketing stack so it can be used for audience segmentation to improve marketing campaign performance as well. Now, all of this information can be retrieved from the transaction data that typically resides inside the bank. Now, of course, it'll become even more powerful once open banking is fully embraced. But the key is to have a platform to cleanse, enrich data, run the machine learning models that identify what's most important for the customer to be aware of and to act on, and deliver it in a way that's proactive. The same platform that offers personalized interactions and automated programs also provides a financial activity map, which aggregates transactions into a portfolio view and also shows specific events and opportunities at the customer level. In the portfolio view, one can see, for instance, loan amounts that are held at the bank versus external, and which competitors are increasing share versus having decline in share. And at the customer level, we're calling out the opportunity for a home improvement loan based on their transaction activity that we recognize. We call this customer enrichment. In an environment where most banks are cutting branches, here's an opportunity to drive improved banker productivity and relationship depth by having digital and banker channels operate in a connected fashion. While data-driven personalization is in its initial stages, strong results have been realized with much, much more to come. Our clients are seeing 25 to 40% of customers engage on a monthly basis, higher digital sales rates, much stronger levels of satisfaction, and demonstrably better retention from customers that engage with the personalized interactions. Data-driven personalization can create a positive flywheel, driving higher engagement, stronger sales, increased banker and marketing productivity, and then can be extended from the consumer side to small business and wealth by consuming that data and providing interactions for consumer, small business, and wealth customers as well. My message for regional banks, in summary, is don't get embroiled in a chase for digital features or a digital features arms race. Focus on capabilities that can differentiate the way you interact with customers. Leverage data-driven personalization to deliver proactive and intelligent interactions and deliver them cost-effectively and at scale so customers can accomplish their jobs to be done. And this will result in a strong business impact and a loyal customer franchise. Thank you.